This is Cary with Wicked Signal, and this is an update on Microsoft Corporation. I put out a video, I think it was in early November, November 10th, I believe it was, on Microsoft, then talking about key resistance, breakout resistance to the upside that the market was in the midst of testing. It is yet to push through that area. I'm going to show you that in a moment. This is nothing more than a weekly chart going back some 30 years on Microsoft. I'm not going to go into all the highs and lows. Most people know about Microsoft. If you don't, you've been living in a cave for 30 years, obviously, and many of you trade Microsoft, or at least watch it. Before I jump into it, just want to remind you to please tell your trader or investor friends about wickedsignal.com. Have them click the free subscription link at the top, first name, last name, email address. You or they will receive an email each and every time a new video analysis is uploaded and ready for your viewing. I will not fill your email inbox with sales pitches, and I do not share your information, your contact information, with anyone outside of the organization. Let's talk about Microsoft, and I'm going to open up the chart in this area. And you can see over the last couple of years, you'll be able to make sense of the formations I'm going to show you. Much of this is actually repeat. You can actually see the initial video from November. Things have changed ever so slightly. Breakout resistance has risen, and I'm just updating you on how should I phrase this? A buy signal that would play out under a particular circumstance. Till then, this stock is in a consolidation framework that's gone on since August. This series, these two channel tops, you're probably familiar with if you did watch the video. I believe it was 227.70 was that second high. Now this formation, this rising formation, is at 232.07 the week of Monday, December 28th, and 4 full weeks later rises to 234.56 the week of Monday, January 25th. Now this is the area that we would need to settle above by at least a 1% margin. I like to use the 1% violation threshold, and you can see I even give you an example here of 232.07, where that formation is the week that I'm recording this, the week of Monday, December 28th. 1% beyond that is 234.39. In other words, were this Microsoft to rally this week and close Thursday, the last day of this trading week going into New Year's, were it to settle Thursday above 234.39, this in fact would be, in my opinion, a reliable buy signal that should play out through the first quarter. The next several months then likely to reach into the 270s. 276.69 channel top, you can see here, would then be indicated, and I would give that 2 to 3 months at least. That formation is moving away and rising gradually, so the potential profit would be even higher if the market just sort of kind of ground its way up over time, over a longer period of time, where it would take, say, into the second quarter to realize that formation would be in the 280s. But the week of Monday, January 25th, it's 276.69. And if we got that buy signal anytime soon, it's roughly a 20% gain over the following several months. Now, I'm going to show you support here. Same channel support. That is the base, the top of which is the resistance I showed you a moment ago, the base of which, at least initially, is 205.94. This week rises to 208.85 the week of Monday, January 25th. And as per usual, 4 weeks apart, you can subtract these numbers out, divide by 4, and you'll have the exact location of that channel bottom through January. This is an area that can contain at least weekly selling pressures and quite possibly monthly selling pressures. Overall, though, holding below the 230s resistance I showed you a moment ago does allow the lower 190s over this next month, 2 or 3. And so I'm saying that if we were to close below 205.94, or at least wherever that formation is this week, rises to 208.85 the final week of January, wherever that formation is, closing below it by a 1% margin at least would indicate the very low 190s. By that point in time, I suspect I will shoot another brief video on Microsoft. But right now, let me just sort of clarify that we're still in a consolidation framework with the ceiling in the very low 230s and the floor really in the it's not even in the 210s. It's in the very low 200 area, 205.94 to 208.85. And that's about, almost a 30-point range, 25-point range that we could trade inside of through January and well into February. And once again, closing above the low 230s at 234.56 level that final week of January would signal bullish continuation into through the first quarter and into the second quarter, the following 2 to 3 months, then likely to reach into the 270s. Until then, we're locked in a two-sided framework. And honestly, as we push, assuming we push into the lower 230s, that is good, put buying, call selling, a short selling, long liquidating, whatever, however it is that you like to position yourself, either neutral or bearish at that point in time. That would be the play. And then, of course, closing above that 234.56 formation or wherever it is, but I'm talking that final week of January by at least a 1% margin. Time to go long, and however you do that, maybe buy some 280 calls. I think that's a good play, actually, buying 280 calls with a settlement above that 230s resistance, and then make sure that those calls have at least 3 months of life left in them. I think that's really all that needs to be said for this little reminder on Microsoft.